If you are only looking at the daily price charts, you are absolutely going to miss the next bull run. Seriously. While everyone's been distracted by the noise, the US government just quietly opened the main on-ramp for trillions of dollars in institutional capital. By the end of this short explainer, you're going to understand the one structural signal that truly matters right now. Okay, let's get right into it. The single biggest mistake you can make in crypto right now is getting hung up on the day-to-day price action. All that up and down, the volatility, it's not the real story. It's actually a distraction. See, we're moving out of a phase that was all about retail hype and into something far more serious, a mature, utility-focused phase. And focusing on price means you're looking the wrong way. And this slide just lays it out perfectly. On the left, you've got what everyone's talking about, the daily swings, the hype, the speculation, all that short-term noise that grabs the headlines. But on the right, that's where the real action is happening. We are talking about a massive structural build-out, the long-term plumbing and infrastructure for the entire industry's next chapter. While the market's looking left, all the smart money is laser-focused on the right.
So what is this structural build-out I keep mentioning? Well, this brings us to the absolute core of our explainer today. It's a game-changing announcement from a major U.S. federal regulator, the Commodity Futures Trading Commission, or, as you know it, the CFTC. Now, the source of this quote is what makes it so incredibly powerful. This isn't some analyst's opinion or a rumor from a blog. This is a direct statement from the acting chairman of the CFTC. This is a top-tier federal regulator giving a direct, unambiguous green light. I mean, the significance of this cannot be overstated. This is the official opening of the federal on-ramp for spot crypto.
So let's be super clear about what spot crypto trading actually means here. We're talking about the direct buying and selling of the actual asset itself. Not futures, not options, the real thing. Until now, this has mostly happened in these kind of murky, state-regulated or offshore gray zones, which, let's be honest, kept a lot of the big money on the sidelines. Bringing this under full federal oversight is a monumental shift. It provides the legitimacy, the safety, the regulatory clarity that large institutions have been waiting for. Okay, so we've got federal oversight. So what? How does that actually translate into real market impact? Why does this one specific move have the power to unlock a potential tidal wave of capital? Let's break down exactly how this whole thing works. This single regulatory change just systematically dismantles the three biggest barriers that kept institutional money out. First, it unlocks direct access for the real heavy hitters. Think massive pension funds and banks that were previously barred from even touching this market. Second, it enables extreme capital efficiency. This allows for complex strategies like portfolio margining, which is basically a fancy way for firms to use all their assets as collateral, making their capital go way, way farther. And third, and maybe most importantly, it establishes that federal oversight that is a non-negotiable absolute requirement for this kind of big money. Now, you've got to understand this CFTC move isn't happening in a vacuum. Nope, it is part of a much larger cooperative shift that's happening across all the federal agencies. This story is developing fast, so if you're getting value from this breakdown, please make sure you subscribe to Crypto Global News, like, share, and hit that bell icon. Trust me, you are not going to want to miss our next update as this all unfolds. Just listen to the change in tone from other major regulatory voices. A former SEC Commissioner, Paul Atkins, recently said that tokenization, turning real-world assets into digital tokens on a blockchain, is inevitable. He even argued that regulators must embrace this stuff. This sentiment, it's a complete 180 from the hostile stance we've all gotten so used to over the past few years. So the takeaway here is crystal clear. The era of regulatory hostility, it's over. What we are witnessing right now is the beginning of a brand new phase, one of cooperation and harmonization between the SEC and the CFTC. They're no longer fighting the industry. It seems like they're finally working to build a real framework to support it. All right, let's tie all of these threads together. When you combine the CFTC's concrete, real-world action with the SEC's new, cooperative tone, you get one undeniable conclusion about the future of crypto right here in the United States. So to sum it all up, here's what you need to take away. 1. Stop watching the price and start watching the infrastructure. 2. The CFTC has just built the federal superhighway for institutional money to get into spot crypto. 3. Access for the big players is no longer a what-if theory. It is a present-day reality. 4. The regulators are finally moving in harmony. And because of all of this, number 5, the floodgates for institutional capital are now officially, without a doubt, open. And that leaves us with one final crucial question. Now that these regulatory doors are wide open, the conversation is no longer about if that massive wave of institutional capital will finally arrive, but just how fast it's all going to come pouring in.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.